Okay, guys, good evening, everyone. Good evening. Okay, so who is on the call this evening? Who is on the call this evening? Let me know. You just put in your name in the chat box. Let me know who is on the call this evening. Put your name in the chat box. Come on. Bam, bam, bam. Okay. Okay, so good evening to everyone. If you can hear me on the call this evening, you can hear me on the call this evening. Okay, so I hope you can hear me. I hope you can hear me. So if you're on the call, come on, give me some emojis. Good evening, yeah, Kerry. Good evening. Welcome to the call tonight. Welcome to the call tonight. I celebrate you. Good to have you on the call. Yeah. I believe you've learned something in the past 2 days, and I really am going to be apologizing for yesterday. Yesterday's call went cut off, technical issues, and in fact, I think I did some over 30 minutes of talking before I realized that the 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 streaming had stopped. I realized the streaming has stopped, but you know what? We're good to go today. But I promise tomorrow I'm going to be doing a makeup for yesterday class, so we're going to take yesterday's class all over again. So opportunity for people to learn more. Okay, so like I said from yesterday or at the beginning, that one of the biggest value I want everyone to go away with on this call is understanding the right mind frame, the right psychology to actually to become a successful trader. So it's not just about learning and understanding the strategies, the technicalities. It's also very important that we. It's also very important that we know the what actually help people to win, and the biggest thing that helps people to win, that make people win in the forex market, or not just forex market, the financial market generally, when it comes to trading, it's understanding those psychology. So what I tried to do yesterday was to take us through did a little explanation of some of the basic terms, and to help us to understand that prevailing psychology. How do investors think? How do people invest in this market as institutional traders, as hedge funders, as how do they approach the market in their thinking? What are the questions they ask? Now, I did say yesterday that question we ask, are so powerful in trading, and they are really the magic word to successful trading. The question I ask, we talked about the way they think about how they think about risk. The question they ask, how much am I willing to lose? What's the security around my capital? How much am I willing to lose? Can I afford to lose, this much? And we look at some of the key um, indices that they use to establish the concept of risk taking in trading. We talked about price, entry, stop loss, and the percentage risk. Then I think I was about talking about the profit maximization, and that was the way where the streaming went off, where I was talking about risk reward ratio. And but like I said, we are gonna I we can't we're gonna I'm gonna take that topic again. I'm gonna take that call show again tomorrow, possibly same time. But for today, let's just go and understand how can I calculate my lot sizes. Now, like I said, I want to really make this very simple for everyone. Okay, so how do I calculate my stop losses is very, very important. So what do I need to do to calculate my stop loss? Okay, so let's look at it. I'm taking us right there, right now. Okay, so of course there are manual way of calculating your stop loss, but it's really going to take a lot of time. So this is what I advise. You can come to myforexbook.com and come to calculator. Let's check it. My forex book, my FX book rather, my fxbook.com. So once you come to my fxbook.com, it's going to bring you here. This is the home page, and all you need to do is come to calculators. Calculators, look at it here. So you come to FS calculators and you click it. So it's going to ask you that which calculator do you want to use. So you can see that there are different calculator that help you to calculate pips if you don't know how to calculate pips and all of that. So we are going to select position size calculator. Look at it. This position size calculator will calculate the required position size, or let us say the required lot size, or the required trade size. So they can use any of those based on your currency pair, risk level, and the stop loss in pips. Okay, so these are all the indices that we require to calculate our stop loss. So this helps you to calculate your stop loss. I mean, sorry, your lot size. It helps you to calculate your lot size accurately. So here, what are some of the key, you know, uh, um, information or data that you need to calculate your lot size? Number one, of course, before you trade, you decide which currency pair do I want to trade. So let's say in this case, I want to trade Euro USD. Your currency, so you see the currency pair. The next thing you see is account currency. Now, account currency means you want to calculate it in which, you want to use which currency to calculate. So dollars. So you're trading with dollars. So you should also use dollars, your currency stuff, okay? And then the next thing, which is very important after this, is and then the next thing, which is very important after this, is 1 minute. And then the next thing, which is very important after this, is 1 minute. And then the next thing, which is very important. Okay, so this should be better now. So you can see account currency. So this should be better now. So you account currency. Now, after account currency, your account currency will have to be in USD. It will be in dollars. Okay, your account currency will be in dollars. So the next thing is account size. Now, this account size means the capital, what you have as balance in your account. So how much do you have as balance in your account? Okay, so let's say what you have in your account is $500. So you put it there, $500. Okay, so the next one, let's say what you have next is your risk ratio. So this is the risk ratio I was talking about yesterday. In determining, I say investor think, how much am I willing to risk? So, and I told you yesterday that don't ever risk maximum 3% of your account. Don't, for a conservative trading, Don't risk more than 3% of your account max. So let's say I want to risk 3%. So I put 3% here. Then the next thing is my stop loss in pips. So, like I said yesterday, it's part of the things that uh, so investors look at, because, like I explained yesterday, your stop loss, you know, help you cap your loss. It helps you, stipulate how much you're willing to lose in terms of pips. How much I'm willing to lose in case this trade does not go in my way. So the wider your stop loss, the lower the lot size you can trade in the market. And don't forget what we say about lot size yesterday. We said lot size is the volume or the amount of unit of trade that you want to take, how much unit you want to buy. Okay. And I told you that in a standard lot, we have 100,000. So how much you have determines the amount of unit you can buy per currency. So let's say in this scenario, let's say our stop loss is 15 pips. I'll put 15. So I have my currency. I have the account currency which I'm using to trade. I have my account size, that is what I have as balance in my account. I have the percentage risk I'm willing to take, 3%. I have the stop loss. What is going to limit my loss in case the trade does not go in my favor. Okay. And then the trade size, of course, the trade size is a standard one. So the next thing I will do is to click on calculate. So look at it. So you see the result. How much am I going to lose if I take this trade? $15. If this trade, how much am I risking in money value is $15. So if this trade does not go my way, I'm only risking $15 out of $500, which is good. What is the total number of units that I am going to buy or sell if I take this trade? 10,000 units. 10,000 units. And what's the recommended lot size that is asking me to use? The recommended lot size is 0.1. Okay. So one of the things I'm going to do, first of all, before I go over and do that, let me ask you here. How many of you here, and I want you to respond. I want you to respond in the chat box. Uh, how many of you here, you've already started taking trade, or you have never taken a trade before? You don't have an MT4. You have never taken a trade before. Let me put that in the chat. In the chat, I've never taken a trade before. Okay. So okay, yeah. Kerry has never taken a trade. So because of Kerry, let's go and see. It's gonna be on the computer now. It's gonna be on the computer now. Let's go and see how we take a trade. Let's go and see how we take a trade. So just give me a minute. Okay. 1 minute, please. I need to quickly do the system preferences. Mm. Okay, I'm just a minute. I'm trying to unlock so that I can share my screen, but oops. Okay, I can't. Oh God. Okay. Okay, that's fine. You know what? You know what we do? I'm having difficulty sharing my MetaTrader 4. So this is what we're going to do. Because of Kerry, what we're going to do? We are Tomorrow we are going to be using Zoom instead of StreamYard. So we use Zoom. So on Zoom, I'll be able to show you all of that. So that will be the first thing I'll go over tomorrow at the makeup class. I'm going to do that first tomorrow so you understand what I am saying here today, as far as what do you call it? As far as placing a trade is concerned. Okay, as far as trading placing a trade is concerned. But just follow and take your note. So what I'm teaching you here now is how to calculate your lot size. Before you place any trade, if you have to select your lot size. Like we said yesterday, your lot size will determine the amount of trade, the volume or the unit of trade you can take. So I've given an example here. The first thing you impute is the currency you want to trade. USD, make sure this one has to be constant. Account currency will have to be constant. Your account size will be dependent on what you have as in your account. Then risk ratio, how much you want to risk in percentage. Then the next one is your stop loss. I spoke about stop loss extensively yesterday. You put in your stop loss in pips. Your standard lot size, make sure it is one. Put it in one. Leave it here, and then click on calculate, and it's going to bring. So this is the one that you will need size. This is the one you will put in your trading app on your MT4 0.1. So your lot size is going to be 0.1. Okay. So if this trade does not go my way, how much am I going to lose? $15 out of my 500. So I can lose $15, but I can make times two, times three, times four, times five of $15. Did you get that? I can lose $15, but I can I can make profit of times two, times three, times four, times five of $15. So that one is a function of how much I can make now. is a function of how effective my analysis is. Okay, so the next thing I'm going to be showing you now. Okay, so let's look at some variables. Let's pick another currency. Let's see USD. Let's see card. USD card. This time around, let's say what I have in my account is $200. Okay, before I even take USD card, let me go back to Euro USD and show you. So this time around, my account size is $200. It's no longer at 500. I'm risking 15% still. My risk ratio is still 3%. Let's see the lot size is going to recommend to us. Can you see it? 0.04. How much am I risking now? $6. What the total unit is going to purchase or is going to transact? 4,000 units. So 0.04 is the lot size I'm going to put in my trading app. I'm just trying to show you all the variables. What if I change this to 1%? Pay attention. I change it to 1%. It reduces my loss, the unit I'm going to trade, and the lot size I'm going to use to trade. So let's change the stop loss and see what we change. So I change the stop loss to fall. Let's see. Wow, can you see that? I change the stop loss. My risk is still $2. My total transaction unit is 5,000, and my lot size changed to 0.05. Now, this lot size, which you are seeing here, 0.05, is what determines how much you can lose and how much, is what determines how much you can make in terms of money. So, because it indicates the total number of units you are buying. 0.05 is a 5,000 unit. Is a 5,000 units. So, this gives you idea of how much you can make. Okay, so these sizes, determine how much you are going to make at the end of the day. But what determine how much you're going to lose is your risk rate, how much you have chosen to risk. Let's look at this. What if I increase my risk rate to, let's say, 5%? Let's see what will happen. My lot size increased, and how much I'm going to lose increased to $10. But my lot size has increased as well. So this means that I'm going to lose more than when I was risking 1%. Okay, but I'm going to make more as well if the trade goes my way. So let's look at another currency. Let's try another currency. Let's try pounds JPY. Can you see that with pounds JPY, the lot size has changed to 0.34 using the same variables? The only thing I changed was the pair. 0.34. Why? Because JPY is seen as a less volatile pair than Euro USD. Let's look at Euro USD card. USD card. Pay attention to the lot size column. See, USD card 0.32. 0.32. Every other variable remains the same, but the just changing the currency pairs alone. Just to I'm showing you this so that you can see how these currency pairs, you know, can determine. Okay, now I've changed to pound USD. it has reduced our lot size to 0.225. Why? Because pound USD, Euro USD, they are called major pairs. I talked about them yesterday. They are called the major pairs. 2 days ago, we talked about that. Major pairs. So when it comes to major pairs, you want, when you use this lot size calculator like this, it helps you to manage your risk. So, now I want you to do me a quick favor, a quick practical. Okay, I want you can download my forex book as a mobile app, and you can use it on the website like I'm using it. So for the purpose of this class, I want us to do a quick practical. So wherever you are, quickly log on to myforexbook.com. Okay, log on to it. Are you there? So once you log on to it, look for calculators and select position size calculator. Okay, so one after the other. Once you have logged on to my first boot calculator, let me know. Just tell me. Just put it in the chat box that done. Okay. Put it there, done. Once you are done, log on to my FX book rather, myfxbook.com, and go to position size calculator. Okay. Now let's do this. So is it, if you are done, if you are there, just put done in the chat box. Let me know. Put put done in the chat box. Let's see. Okay, so go to myfxbook.com and go to position size calculator. I want you to try your hands on the lot size calculation, and then you see. Okay, so once you are there, put in any currency of your choice that you want. Select any currency pair of your choice. Make sure your account currency is in dollars. Put in any account size of your choice. Your risk ratio, make it 3%. Make your risk ratio 3%. Make your stop loss 10 pips. 10. Your stop loss, make it 10. And your trade size, leave it at 1, and then calculate. So type the result that you got. Type the result that you got in the chat box. Can we do that, guys? Can we do that? Can we do that? myfxbook.com. 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 That's it. Okay, I'll put that. Okay, myfxbook.com. So that's the website. So, are you there? So anyway, so you do that. You do that because of time. Because of time, let's make progress. Mhm. So now let me sh- let me share with you. 1 minute. Okay, post your result if you are done. Post your result if you are done. Okay, so you said what am I looking for? Okay. So you are looking for position size calculator, okay? If you are there. You are looking for position size calculator. Position size calculator. That's what you're looking for. You're looking for position size calculator. So you let me know how it goes, okay? So once you find position size calculator, put in all those data I talked about. Okay, so while you're doing that, let me let me move on and let's discuss how let's discuss how um uh market structure trends. So we're going to discuss trends, okay? Now, as far as the forex market is concerned, when it comes to trading, we are able to make money because there is trend. Now I want you to note some of these lesson, if you don't mind. Note some of these yeah, let's note some of these instruction rules, or if you like, call them rules of trading. Number one, never never trade against the trend. Never trade against the trend. Make sure that all your trading is done in line with the trend. Okay, make sure your trading is done. Okay, Kerry, don't worry. We'll get back to positions as calculator because of time. I don't want to always exceed the 1 hour time. So never trade against the trend. Please note this rule. Have it make sure it's written in your heart at the back of your hand, anywhere you can write it. Never trade against the trend. The trend always is your friend. The trend is your friend. I want to render in different ways so that you see the friend is your friend. The trend the trends will make you money. Okay. Okay. And then, so number two rule, never trade without a stop loss. So let me just leave it at there so that I don't bombard you with too much. Never trade without stop loss. Never trade without a stop loss. Okay? Can you see those rules? Note these two rules. So, what is a trend? Let's go and check it. Let me first explain here. Now, a trend is a given direction that price is going towards. A trend is a movement. Okay, this movement is usually diagonal. a movement which price is going to. So you can see price do this. So you can see, and then you can see price doing this. So when price, when the angle of elevation, when the price is on an elevation angle like this, in an elevation like this, we say it is an uptrend. We say it is uptrend, also called bullish bullish trend, also called what? Bullish trend. When a trend, when you see market going down like this, we call it downtrend, also called bearish trend. Okay, so you can see, so uptrend and bearish trend. So these are the two trends that we have in the market: uptrend and bearish trend. Uptrend and downtrend, bullish trend and bearish trend. Okay, these are the two trends that we have in the market. So please note, please note this. So can you see? So let's quickly go to, let me, let's go to the chart. Now these are the charts. If I just take my trend line like this and I pick this place and I try to join the edge, you can see that the line is going down, right? So this, in this scenario now, when I pick, whether I pick the top and I try to join all the tops, the line is showing that my price is going down, right? So if I try to pick all the down, all the lows as well, it's still showing that price is going down. Now let's look at this other scenario. Look, if I pick the all the bottom, it's showing that price is going up, right? If I put it on the top as well, if I put it on what I mean by tops and downs are all these places, all those places. Okay, so you, so if you pick all this, so these are the points I'm looking at. So I just pick one point and I connect it to the next point, to the next point. So you can see this is a case of Here, market is down. Here, market is going up. Okay, so you can see here, market is coming down. Here, market is going up. So this is a downtrend. This is an uptrend. So let's look at another currency pair, and let's see where we can easily find uptrend or downtrend. Hmm. Wow. So if we look at this now, if I pick this point and I pick this next point, oh yeah, tell me where is the angle going? Put it in the chat box. Kerry says he's lost. Ke- Kerry, but are you seeing my up? Okay, good. Kerry, don't worry. Just calm down and continue to follow from where we are. Don't try to catch up. Just continue from where we are, okay? Just continue from where we are. So later it's going to add up. So you can see that the arrow is going up in this scenario. It's going up. So this particular currency is in an uptrend. Is in an uptrend, and you can see that movement. It goes up, it comes down, it goes up, it comes down. It is going up right now. Maybe it will come down to go up again, to come down again, and then we continue in that series. So Kerry, you want to leave the position size calculator and just join what we are doing now. It will add up later. Now let me show us another scenario. Gum. Let's look at this scenario. I pick this top here, I pick the next top. Now here, what are you seeing? What are you seeing here? Market, what can you see? Where's the arrow pointing towards? Okay, so the arrow is pointing down. So that's the downtrend. From here to here, we are in a downtrend on this trade. So anytime you are trading, it's important you determine what is the trend of the trade I want to take. What's the trend? What's the trend? Where is the direction the market is going? Very important question you always have to ask yourself. What's the trend? Okay. Now, guys, this is where I want to teach you some really important lesson. This is how to trade. So once I know the trend, I pick all these, I'm joining all the eyes. This eye, this is a low, this is a low, this is a low. Okay, this is this is one eye, this is one eye. So the in trend, there's what we call highs and lows. There's what we call highs and lows. So what is it? What is high? Let's go and look at it. What is high? A price comes like this, it goes up, and then it turns back. This here is a low. That's low level. Don't forget we said in trading you buy from the low and you sell from the high. So this high. So how do we call it high? Because when price got to that point, it turns down, so it formed the high. Now price comes down a bit again and then continues and goes up again. And then what happens? This one give us a lower low, a higher low. So meaning that this point here is a low, but the level is higher than this one. Can you see? So this is the first low here, and this is the next low. Now this second low is higher than this first one. Then here is a new high. So market has gone up again and it has curved down again, giving us a new high. Now this second high is called higher high. Why? Because this high is higher than this one. Let me put another. Can you see? So is higher than this one, is higher than this one. So we call it higher high. Now price has come down a bit again, and then it's going up again. Now again we have another higher low. Why? Because this price level here, this point here, is higher than this previous low. And then when it went up again, it went up above higher high, this which was the previous high. So we have a new high which is higher than the previous one. So this is how trend works. So in a trend, you keep having a series of, if it's an uptrend, you keep having a series of low, higher, low, high, higher, higher, low, higher, high, higher, low, higher, high. So if I pick my trend line and I select this low, I join it to this one, I join it to this one, and then you see that the market is going upward. The arrow is, the line is going upward. So this is uptrend. This is uptrend, meaning that market is trending up. Market is going up. So as a trader in this uptrend, where are you? What type of trade are you supposed to trade? So I want you to note this. I want you to make a note, please. Make a note. Make a note now. In an uptrend, only look for opportunities to buy. Did you see that? Only look for opportunities to buy. In an uptrend, only look for opportunities to buy. Please note that. If you can, note that. So at which point am I supposed to buy? Now, don't forget the rule. You only buy when the market is low. So when we are talking about buying, you look, where do we have the lows? On our graph, we have low here. So the lows are where we can buy. I can buy here. I can buy when market came here. I can buy here. I can buy where market came here. I can buy when market came here. The next place I can buy is when market comes here. Can I buy here? No, I cannot buy here. Can I buy here? No, I cannot buy here. Can I buy here? No, I cannot buy here. So in trading, you buy the lows. And the only time when you buy is when you can establish that market is in an uptrend. And how can we establish it? You will see this series of higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Note, never be patient, never buy, never sell when market is up, is going up. Never sell, no matter what. Never sell when market is going up. Always be patient and wait for market to come back to a low, ready to go up before you buy. Okay, so let's go and look at the main chart. Let's look at example of where we are supposed to buy. So let's look at what happened here. So you see, uh, you see those series. Now, can you see this? This was low here. With okay, wait, let me mark them. So we have low there. So market was low here. Then we have high here. High. The market came back again and it gave us a low. Went up again, gave us a high. Now the high that this market gave us here, if we look at it, is not higher than the previous one. It's not higher than the previous one. So it's still lower than this high. So the most prevailing high, or the high that we are going to consider, is still this first one. Let me put I think is this hanging or what? Okay, yeah. So this high is still the relevant one. Why? Because it's still higher than this one. But if we look, we have a low here. No, what is this now? So we have higher low here, meaning that this low here is higher than the previous one. Oh, what's this? Sorry, guys. I think okay. So we have higher low. Okay. So after this low, the next high you will see is this one here. So that becomes our higher high. Then you see that this market came down, but we have a low that is lower than it. So this one becomes the relevant lower low. This one here, higher low. So here we have higher low. Then after this, you see that the market went up again, and then we have another higher high here. That is, market went further up. So this is higher high. Then we have another higher low here. So guys, so if we look at all these higher high, higher low in this series, you realize that market, if you pick your trend line and you mark it like this, you see that, and you put it on all the higher lows, you see that market is going up. So as a trader, you would only be buy at this during this time. You would only be looking for a way to buy this currency. So you bought here, you will buy again here, you will buy again here, you will buy again here. Okay. So in this particular series, in this particular price movement, you only buy where the market is showing you a low. You wait for market to go up, you wait for it to come back down, identify a low, buy, 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 buy. Now, if you understand this uptrend, put in I got it in the chat box. Put I got it in the chat box. Okay, let's put I got it in the chat box if you get that. Okay, so please put I got it in the chat box. Put I got it in the chat box. I'm waiting for a comment before I move on to the bearish analysis. Only buy where you find low, where the market is low. Market we always come down in a bullish market. It will always come down to peak strength and go up. So so you see who some people who lose in trade. Once they see market is going up, they start to buy where they don't find the low. They begin to buy where they don't find the low. Now, you just imagine somebody who came to buy here. Imagine someone who decided to buy here. And right after he bought, market started coming down. So that person is going to lose because he's buying at a high, not at a low. Always buy at a low, never buy at where market is already left a low. So once market has already left a low, leave it. It is better you have your money than for you to take unnecessary risk or poor risk in the market. Okay, so let's go to the bearish. Let's explain. Let's look at the example of a bearish and let's use it to explain. Okay, good guys. Made some money from this particular trade. Made some money from this particular trade. But if you can look at this trade, you see that it has been a bear. It has been going down since 2013. Since April 2013, this trade has been going down. And let me show you. See this April 2013 here. So we have I. We have I. April 2013, we have I. After that, we have a low. The next time market went up, and the next visible high we can see is this one. So we call it a lower high. Why? Because it's lower than the previous one. It's lower than this previous one. Then what do you see the next time? Market came down again, gave us another, this time around, gave us a lower low. Why do we call it lower low? Because it's lower than the previous one. Then what do you see market do again? Market went up again, gave us another lower high. Why are we calling it lower high? Because it's lower than the previous high. It's lower than the previous high. Then we have another low. This one is this time around the lower low. Why? Because it's lower than the previous low. This is the previous low here. Then the next time we see another high here. But this time around is the lower high because it's lower than the previous low. So you see now, this low is the most significant low. I mean, it's the previous low. There is no other low that is lower than it until this one. So it's the one we are going to recognize now. So we have another lower low. And then we have another higher low because after this low, market came up. And then we have another lower high. Sorry. Another lower high, not higher low. So if you look at this and you pick your trend line and you try to join all the eyes, all this, and you try to join the eyes, let's just pick the key ones, the significant one that is easy to draw. You see that market is going, market is going up, right? Down, sorry, market is going down. Market is going down. So for a sell, you only sell when the market comes to these highs. Never sell. Never sell at a low. You sell only where you can see all these places you are seeing highs. These are the places you can sell where you are seeing these black arrows. So people who don't make money from trade, they don't pay attention to this rule. Now they will want to sell in the middle or at this place. So when it comes to sell, please never sell here. Never sell here. Never sell here. Never sell here. The only places where you can sell are all this high. Now, if you look at this trade now, we are waiting for it to come around there, and then we are going to sell it for it to come down. So we are looking for a high somewhere around there. So that's one of the trades we are waiting to trade. So when market comes up here now, we are going to look for a sell around there. And once we sell it, we'll wait for it to start coming down and we'll be in profit. Wait for it to start coming down and we'll be in profit. So when that is how trend trading work. Please don't forget what I said. Rule as a trader, remember, trade is the trend. Never you trade against the trend. Never you trade against the trend. Very important. Always know where is the trend. Where is the trend going? Is it going up or down? So if the trend is going down, you will be looking for high price level, highs, where you are going to sell. When the trend is going up, you'll be looking for low price level to buy. So let's take that as a note. Let's take that as a note. Let's take that as a note. Trading conditions. When the market, when the price is in uptrend, only buy at the lows. When when the market, when the price is in downtrend, only sell at the highs. So this is what you need, guys. To be this is what you need to know. When the price is in uptrend, only buy at the lows. When the price is in downtrend, only sell at the highs. Okay, so let me take a pause and for today, and we're gonna continue tomorrow, which is gonna be our final session. Okay. Can I buy at a higher low? Yes, you can buy at a higher low. That's what I was saying. So a higher low is also part of the lows. We only call it higher low because it's higher. That low is higher than the previous lows. Okay. So let me take questions, guys. Let me take questions, and then we'll take it up. We'll continue tomorrow. This is almost 1 hour 30 minutes. Do you have questions? Let me take your question, and then we'll continue from here tomorrow. Do you have questions, guys? Question. Okay. Anyway, if there's no question, guys, then that will be the call for today. If you have questions along the way, okay, what you want to do is you can put it in the Telegram group. I will respond to it. Now, I also want to advise you, please. What make the you forex trading is not in the book knowledge, is in the practical knowledge. So after now, what you want to do is go to Trading View. Okay, go to Trading View, guys, and go to Trading View. Type Trading View. Okay, type Trading View. Go to your browser and try Trading View and open a free account on Trading View. TradingView.com. Open a free account and log in and start practicing some of these things I shared with you. Start looking for the downtrend and the uptrend. Okay, so that's going, in fact, that's going to be the assignment. Go to Trading View, open a free account. So once you open a free account, it's going to bring you to it's going to bring you here. Once you open it, it's going to bring you here, some to a chart like this, to a chart like my own, like this. Okay, it's going to bring you to a chart like my own. It's going to look pretty much like this. So it's made, you will see with candles like this. Okay, candles. So when you see with candles, you under here, you will see where you can zoom in, zoom out. So you may want to zoom out so that you can see all the highs and the lows very well. So once you see all the highs, like this one, this is an upward trend. We have highs and lows, highs and lows. So once you see that very well, okay, just try and mark it out. Mark out all the lows, higher lows, try and mark it out. You get? And then draw a line on it. Where will I see what to draw a line with? On your left here, you will see trend line. You just click it and you drag it over like this. Okay, so just try. Even if you cannot use the tools, just mentally, mentally draw, um identify the trend, see if it is going up and see if it is going down, see if it is going up, see if it is going down. Do you get? So when we get into our other classes, you will be able to learn more and more and more and more and more. I mean, it will be easier for you to don't forget this bootcamp cannot give you all, help you to master it all. So the mastering is going to come in the place of the effort you put in personally to practice, to practice, and to practice. Okay. So if there's no other question, this is the part where I'll be saying thank you for joining us tonight, and then I'll be seeing you tomorrow. Tomorrow I'll let you know the time. It may be a little bit later than 6 p.m., but I'll let you know. Okay, to everyone who has been consistent at this bootcamp, I hope it add value. Please, if it add value, I want you to make sure you please subscribe to my YouTube channel, to this YouTube channel, because I'm gonna be really giving a lot more, recordings. I'll be putting it out here so you can access it. Okay, so, and you invite your friends to check, to subscribe, so that they can also get some beginners training, and make sure they join the community as well on Telegram, so that they can get information. Most of them are going to be free, you know, for now. And so I just make sure that you're following me on all the social media. And then if it's out there in the comment section, please say something about the value you got. If you are following me on Facebook, my Facebook is Ayodeji Oladimeji. That's my Facebook. So you can follow me, Ayodeji Oladimeji. You can see my face if you click on it. If you check Ayodeji Oladimeji, so please follow me on Facebook, guys. Follow me on Facebook, and say some nice comment about the value you got. Put it out there, put it on the group as well. Let's just have the conversation. Let it continue. Thank you, guys. I really want to, really, really, really want to celebrate you for your time, together. And you make me feel so fulfilled sharing this with you. Okay. Thank you, guys. Have a wonderful, wonderful weekend.